a one-word review of ANZ's conduct.
It was grubby. Grubby. That's grubby. It was clearly grubby.
After 4 investigations, the corporate watchdog finds the Big Four bank ripped off its customers for years, as well as the federal government.
Time and time again, ANZ has fallen short. Time and time again, ANZ has betrayed the trust of Australians.
ANZ now faces a whopping $240 million penalty, which requires federal court approval.
These penalties are the highest penalties that ASIC has ever sought in relation to both unconscionable conduct but also in relation to the retail matters.
ANZ misled customers about savings rates. 194,000 accounts weren't paid the correct bonus interest for 11 years. And a further 26,900 signed up to a promotional rate and didn't receive it. The bank also didn't refund fees charged to at least 18,900 dead customers. And it failed to respond to 488 customers who applied for financial hardship. Some waited more than 2 years for the bank to reply.
A vulnerable person who sought help being pursued by debt collectors, that is both traumatic and deeply unacceptable.
The corporate watchdog also found ANZ effectively misled the federal government after it was hired to sell $14 billion of government debt.
ANZ's misconduct potentially made the government $26 million worse off. Money that might have been used to support essential services, including Australia's health and education systems, affecting all Australians. When public funds are put at risk like this, every Australian pays the price.
In a call with investors only, ANZ's leadership claimed the government suffered no financial loss and says the company will repay any money earned. The boss used the penalty to justify 3,500 job losses at the bank.
There have been unacceptable failings. Today's announcement reinforces the fact that change is needed.
As ASIC itself has pointed out, it's now more than 6 years since the Banking Royal Commission, and here we are again. Including this latest record fine, ASIC has brought 11 civil proceedings against ANZ since 2016, with penalties now totalling more than $310 million. Some experts say the bank's executives should pay.
I actually think they should have their bonuses for this particular period cancelled and all clawed back. Why are we allowing anyone to be given an incentive for acting in a way that caused that kind of misconduct?
Customers agree.
Well, it's disgusting. When someone's not doing the right thing, it affects all of us.
Customers, like the corporate regulator, fed up with ongoing bank rot.
While the $240 million proposed penalty being sought by ASIC is a record, for ANZ it draws a line under historical issues and allows the new Chief Executive, Nuno Matos, to implement his renewal strategy. Tim Roche is head of Australia, Japan and New Zealand banks at the credit rating agency Fitch. He joined me earlier. Welcome. Can you explain to us in the simplest terms how serious the original market rigging allegations against ANZ were?
Look, they're very serious allegations, and I think if you take a step back and look at what banks do in the economy, they're very trust-based, and so anything that potentially erodes that trust, and particularly in relation to things like government, you know, they've got licences, social licences to operate. That potentially has a big impact on the business.
But the allegations were serious enough for Fitch to consider revising its rating for ANZ and or its outlook?
Look, we certainly took them into account. These are issues that sort of have stemmed or emerged for the sector over a very long period of time now, and we have focused on non-financial risk in general. Probably for the best part of a decade in our ratings. For ANZ specifically, we did consider them, but ultimately did not take any negative action on the rating as a result of what was put forward by ASIC.
But since these allegations were raised, Fitch did make a move in terms of the outlook.
We changed our outlook on our assessment of the risk profile for ANZ. So for viewers, that's essentially a subset of what we look at when we're assigning a rating. It takes into account things like governance. We had it on a positive outlook, but because of these issues, we revised that back to stable.
And what if, after today and today's news of the settlement between ASIC and ANZ, has Fitch considered another change?
The fine, again, it's a big number, but for a bank like ANZ, we think it is manageable. And then there's the remediation process. And again, the costs associated with that we think are manageable. Okay. So no impact.
And so a bank which posted a half-yearly profit of some $3.6 billion, essentially what you're saying is a fine of $240 million won't trouble it too much?
That's our view, yes.
Okay.
Yep.
3 of the 4 issues included in the settlement with ASIC relate directly to the retail bank and customer engagement. How big a blow is ASIC's very strong condemnation of ANZ's conduct to its reputation?
Oh, look, that's the biggest risk, I think, out of this going forward is what does this mean for the reputation of the bank? We've seen this with a number of other institutions in the past, Westpac, Commonwealth Bank, with some of the AUSTRAC issues that have arisen. And that was probably one of the main concerns that we had out of those issues. Now, ultimately, there wasn't a lasting and meaningful impact on the franchises of those banks, but that is certainly something we'll monitor in the case of ANZ.
What is your view on whether ANZ's decision to cut 4,500 jobs, staff jobs and contractor positions within the coming months will help or hinder its change management process?
So I think that's something we'll need to wait and see or look at the strategy day, the announcements on the 13th of October to get a better sense of how this will play through. In terms of the risk management and the non-financial risk issues that came up today, I think that the management was fairly clear that that was a priority for the bank. And so I don't think you will see the 4,500 jobs that you've mentioned there necessarily impacting their ability to remediate the non-financial risk shortcomings. What
do you see are the key issues and the key risks for the new CEO, Nuno Matos?
Oh, look, I think ANZ has underperformed, particularly in their retail bank in Australia relative to the other banks. So that will be a focus. They have the integration of the Suncorp acquisition to still proceed with. So, sort of accelerating that will be a focus. And then obviously what we're talking about today. So looking at some of these issues that have arisen, not just with ASIC, but with a number of other regulators over time, looking to finalise those and then also finalise the remediation processes associated with them.
Tim Roche, thank you.
Great, thank you very much.